a new warning sign on the economy. Just moments ago, the government delivered a major update on the labor market. It shows jobs growth is weaker, much weaker than previously reported. There were actually 911,000 fewer jobs created in the 12-month period through March of this year. So that makes it the largest preliminary revision on record. CNN business and politics correspondent Vanessa Yurkevich is in New York. I mean, Vanessa, as I just pointed out, this is huge, the largest revision on record. Walk us through what you're learning.
Well, this just signals in that time period from April of 2024 through March of 2025, the jobs market was a lot weaker than initially reported by the Bureau of Labor Statistics. So 911,000 fewer jobs added over that time period. And when you average it out over those 12 months, you get a revision, a downward revision of an average of 76,000 jobs. Now, this is a report that comes out every single year. It is typical. It is a typical report. What is a little bit atypical about this report, it is much higher than what we've seen in previous revisions. So the average number of jobs revised down is a lot greater. Now, it's important to note that this time period that we're looking at, most of these months were under the Biden administration. Just 3 months of this report was under the Trump administration. But in terms of what it's telling us about the economy, it's pointing to key sectors that are seeing downwards revisions in the number of jobs added. Sectors like trade, transportation, utilities, down about 226,000 jobs. And then you have leisure and hospitality and professional business services, also with triple-digit losses in terms of jobs that we thought were there but are not there. This is what happens in these reports. There's a couple reasons why we might be seeing these downward revisions. The first is that this is an estimate initially, and there was weaker than inferred job creation at new companies. So companies thinking they were adding more jobs that they didn't end up adding. Sampling errors from responses from businesses. You get these initial responses from businesses, but then this larger one-year report looks at quarterly tax filings, which are a lot more specific. And also in this preliminary benchmark report, you're not going to see the accounting for undocumented immigrants because they are not included in those quarterly tax filings. So taking away from this, Pamela, a weaker year than what was previously reported. However, typical in terms of these reports that we get. Right. The concern from economists, Pamela, is that President Trump was really upset with revisions in the July jobs report. And what is the thought process here about these revisions and whether or not he believes or the administration believes that this is accurate? But significant downward revisions for that 12-month period, 911,000 jobs, fewer than we expected, a record, Pamela.
Yeah, so let's just put this into context for our viewers because it's a lot to keep up with. I want to take a step back. So you have nearly 1 million jobs with this revision downward, right? There is an acting commissioner right now with BLS who is a career civil servant. Back in July, President Trump fired the BLS commissioner, saying without evidence that she manipulated the data, when at that time she had revised it down to 250,000 jobs. If you would put this in perspective, how this fits into the labor market data that we got on Friday and what this means.
Well, what this does is this is looking at data and the jobs well before what we've seen over the summer. So this is backwards looking, but it is significant because it does show that revisions are such a big part of the Bureau of Labor Statistics reporting. They do the best they can with the initial survey data that businesses give them about how many jobs they're adding. But ultimately, this is a preliminary revision. And then, Pamela, in February of next year, we get a final revision looking at this time period. So as you can see, revisions are a big part of the labor market. The concern is from some economists and from the administration is, does it really paint an accurate picture in the beginning if it's changing so much over time? There's a lot of reasons why these numbers start to change over the course of a year. The BLS gets more data, they get more information that better paints the picture. But President Trump was upset about the July jobs report, which showed a weaker jobs market, and he was upset about the revisions. But as you can see, revisions are a part of this whole process. It just takes some time before we can try to settle on the exact number of jobs added each month and jobs added on an annual basis, Pamela.
All right, Vanessa Yurkevich, thanks so much. Wolf?
And we'll see if President Trump decides to do now to the Bureau of Labor Statistics what he did in July. He fired the director, the commissioner. At that time, he didn't like the numbers, and these numbers are even worse.
And this is an acting commissioner that's in place now, a career civil servant. The person that he nominated to take over BLS has not been confirmed yet, so we'll see.
We'll see what happens and how he reacts.